In a word, meh. That's how you might describe the latest Beige Book, the anecdotal reports on economic activity from the 12 regional Fed banks. Yes, the economy is still growing, but at only a modest pace. That's the word the Fed chose to use. The Fed used that same word, modest, to describe job growth and wage increases since the last Beige Book in mid-April. In other words, this isn't the kind of assessment that turns hawks into doves. There is little, if anything, in today's Beige Book that suggests an urgent need to raise rates at the next Fed meeting on June the 15th. The one area I will say, David, that stands out is labor markets, which the Fed described as tight. Difficulty hiring, of course, should translate into wage and inflation pressures in the months ahead. But as of now, the Fed reported only slight growth in price pressures. Also worth noting is loan demand. The Fed says it was up moderately. Again, that's the word the Fed chose to use. Better than modestly, that other word you see in this report, in 11 of the 12 regional Fed districts. And that indicates that businesses and consumers have the confidence to borrow more, whether it be to buy goods, to hire, to build, or to invest. The Beige Book, as you know, can often be a bit of a sleeper, but 2 weeks away from the June Fed decision, it takes on greater importance. However, it doesn't make an especially strong case for a rate hike, but importantly, it doesn't take the Fed off course either. David?
Erik, I wanted to ask you just what indications we have here, what commentary there is on signs of inflation in the Beige Book today.
Not much. That's the slight growth in price pressures. And this is the sort of push me, pull you side of it. On the push side, you have these tightening labor market conditions, which again should translate into wage and inflation pressures in the months ahead. But anecdotally, the Fed does not report a lot of price pressure now, describing it as only slightly growing.